Hello and welcome to the latest instalment of Wham Vault. I'm joined by the man himself, Jeff Wilson, Chairman of Wilson Asset Management. Jeff, great to see you.
The old man. Good to see you, James.
Now, Jeff, you're about to list your 8th LIC, Wham Strategic Value. Could you tell me a bit about the strategy itself and why you've decided to bring it to market?
Yeah, probably why we're doing it. We're doing it to simplify our structure. I read a great book a little while ago, talking about Steve Jobs at Apple and just saying, what he really focused on is to simplify choices for people. What we're doing with Wham Strategic Value is we're buying $1 of assets and we're trying to pay 80 cents. Of course, we'd love to pay 50 cents if we can. So it's really an undervalued asset play. And it's really going to be doing what we've done for the last 20 years, buying assets cheaply, but the focus of Wham Strategic Value is focusing on mainly listed investment companies and listed investment trusts. So, we've been doing that for 20 years. We've got about $150 million worth of exposure to those type of companies, and that's currently housed in Wham Capital and Wham Active. So we're selling it all across to Wham Strategic Value, which will be the 100% focused on that. And we've got Oscar, who's the lead PM for those two entities. There's Matt, who's the lead PM for Wham Leaders, Katrina, who's the lead PM for Wham Global, and Danya, who's runs Wham Alternate Assets. And the fascinating thing is, who's the lead PM for this new company is myself. As Wham Strategic Value, so the pressure's on.
Pressure's back on.
Yes.
Jeff, one of the things you've been able to do with your stable of LICs is ensure that they trade at premiums to their NTA. What's been the key ingredient or ingredients to making this happen?
Yeah, and of the 6 listed investment companies we floated, they're all trading at NTA if not a premium. The biggest premium is Wham Research, which is 40% plus, which is extreme. Wham Capital is at a 20% odd premium, which is assuming that we'll continue to outperform on a consistent basis. So I mean they're big challenges for the business. And in terms of what is the secret sauce? Now, what I think is, when you're looking at listed investment companies or listed investment trusts, those entities, they have to do a number of things. Firstly, they've got to perform, and that's probably a given with fund managers. Secondly, they've got to provide a growing stream of fully franked dividends, because your marginal buyer tends to be your self-managed super fund, and we've been able to do that. Thirdly, and this is probably what all listed companies need to do, is treat shareholders with respect. And unfortunately, you do get a number of companies that don't understand that the shareholders own the company. So they've really, they really don't treat shareholders with the respect they should have as your owners. And the fourth thing is something that we really spend a lot of time on: shareholder engagement, the communication, and the marketing. And we've got, we employ 8 people in that area. We're just adding another couple, and to me that's the area that a lot of people, when they set up listed investment companies or listed investment trusts, they sort of can focus on the first 3, but they forget to focus on that, and that is very important.
Jeff, we've got a number of questions from Wilson Asset Management shareholders about the new vehicle, so we might run through a few of those. As a starting point, can you provide any specific examples of the LITs or LICs that the new vehicle might buy or hold?
Yes. So with Wham Strategic Value, we're raising $225 million. $125 million is going to come from the Wham family, our 100,000 shareholders amongst our listed investment company. The other $100 million is coming from a broker firm. So that's where the money's coming from. And also we're selling across $150 million worth of LICs that we own in Wham Capital and Wham Active. at an average price over the 10 days before wham strategic value lists. So there's already going to be about $150 million worth of portfolio in there. And in terms of some of the companies that are in there, you've got exposure to some of the best boutique fund managers in Australia. And to me, it's nearly unbelievable. You can get exposure to these people and get exposure cheaply. One is VGI, which has been very topical recently. Rob Luciano, great fund manager. We're able to buy exposure to him at 85 cents in the dollar. What a great opportunity. Another one we've bought more recently, some of the Magellan concentrated fund. So Hamish Douglas, getting exposure to him. We're buying at about a 12% discount. We've just started to nibble there. And if it goes to a bigger discount, we'll take a bigger position. We have a small position in Thorney, and that's Alex Waitslitz. And you're getting exposure to his LIC at a 20% plus discount. Now, it's not only that they're currently in our portfolio smallest positions, because we've got to be confident that we can see the catalyst that's going to change the valuation and move those share prices, say from being 80 cents in the dollar to be trading at $1 in the dollar. So when we have confidence that we have identified those catalysts, then we'll increase our positions. But that's an example of some of the opportunities you get. And to me, it's nearly unbelievable that you can get exposure to these people. I love buying value. I love getting a good deal. It's sort of like going to buy a new car. The guy says, look, you were going to pay $20,000 for the car. You can have it for $16,000. Like, how good is that?
Yeah. Well, Jeff, you've talked, value is one thing you love. The other thing which you're notorious for is paying fully franked dividends. What's the dividend strategy for wham strategic?
The portfolio, at the end of April, the portfolio we've got exposure to at the moment, that's going to go into wham strategic, is trading on a running yield of about 3.6% fully franked. So our plan will be to pay a fully franked dividend to shareholders, and our plan will be to grow that fully franked dividend over time. And what we try to do is enhance the actual yield we're getting with realised profits, to give shareholders a better than a fully franked return that they would get if they're investing in the market. So it'll be, we'll start off, and then the plan will be to provide a growing stream of fully franked dividends.
What about liquidity during times of distress? How have you thought about that with this new portfolio?
Well, the great thing about the listed investment company structure is it's a closed-end pool of capital. So as a fund manager, we have enormous flexibility. So we don't have to buy when everything's expensive, and we're never forced to sell when everyone wants their money back, when things are going badly, during a GFC or the like. We can take whatever opportunities we see present themselves, and we can take a medium and long-term view. And what you tend to find is when there are periods of stress, which you were talking about, that's when the exceptional opportunities present themselves. So, myself as being the lead PM for this, we just have a cash buffer, so we're well positioned when those opportunities present themselves.
Are you participating yourself in this raising?
Yes. I'm committing. Well, I'm investing $5 million. I think that's a good start. I actually have in our more recent IPOs like wham Global and wham Leaders, which we've floated. They're the more recent ones. I've got about a $12 to $13 million exposure to each of those individually. So, if the opportunity presents itself, then I'd like to increase my exposure to wham strategic value. But initially, I'm starting with $5 million exposure.
Now, you mentioned also that you're going to be the lead portfolio manager, putting that cap back on. Who's going to be supporting you in that role?
Well, the great thing is we've got 14 professionals that look at the market globally and domestically. And our focus really is buying undervalued assets domestically, even though occasionally there might be a global opportunity to present itself, but it's mainly domestically. And everyone, like we work in an open plan office, everyone feeds in, with the ideas. Also, in terms of working through some of those opportunities, Jesse Hamilton and Marty McCarthy, really it's a whole team effort.
Mm-hmm. Well, this wham vault really is for your shareholders, so I was wondering if you had a final message about the opportunity in discounted assets for Wilson Asset Management investors.
Well, when you're investing, we're all investing our hard-earned cash, and we've all got a finite amount of cash. What I really enjoy doing is buying something I think is exceptional value. I remember when you're reading about Warren Buffett when he set up or took over or got involved with Berkshire Hathaway in 1965. Some of his early investing was in closed-end pools of capital, like LICs and LITs. And to me, that's the purest type of investing.
Great. Well, Jeff, it's always great to see you. Not often enough these days, but thanks for taking the time to sit down with me and also to speak with your investors.
Thanks, James.